All right, folks, good morning. Tim Davis here, coming to you guys, and I'm gonna call this breaking news because the time is now 6 a.m. or close to 6 a.m., 5:57 a.m. on the East Coast, and today is May the 19th, 2022. Today is a Thursday, and there's a lot of levels I've been watching in this market, and when I see um, something big breaking within the market, I want to try to keep you guys updated as soon as possible, show you guys what's going on within this market and show you guys some key levels that need to be very concerning for those bullish folks who are still bullish this market, and for those buying and hold investors. Um, um, think back for those folks who probably history. If you look in history or Google history, if you want around that, then think back to 1987 when it was they called it a Black Monday, when we had a big downturn on a particular day. I mean, a huge washout, and I consider that to be something like capitulation. I think the markets dropped maybe 20 over 20% in the day for a lot of the markets. Um, because something like that possible happen now? Yes, yes, anything is possible. Anything is possible. What I want to bring to you guys' attention right now is what's happening right now. You know what I'm saying? And nobody can really determine how this ends and where it ends, and if it's about to be a big washout, or if we're gonna get a bounce and then continue to trickle down. Nobody knows. But if you pay attention to some of these key levels, with some of the um, futures e-minis on the Russell, Dow Jones, S&P, and the Nasdaq, pay attention to some of these key levels, you can get a general idea of what to look for and what to be mindful of. So I want to start with the Russell because those folks who follow me for years, that I've been watching certain market. I've been watching the markets for a long time, so I've been watching certain key levels, and I've been watching how certain indexes react in general, and how they relate to other indexes. And what I've noticed is that once the Russell goes, or wherever the Russell goes, everything else tends to follow eventually. So now, with that said, here's the Russell E-minis. I want to highlight a key area, show you guys what to watch out for in the Russell. If the Russell breaks this level, all bets are off. You know what I'm saying? And then, and I'm looking at a weekly chart. If you look at the bottom of my screen, I'll show you guys where RSI is sitting at right now. So RSI right now on Russell on a weekly chart is already sitting right. It's just below the oversold territory on the RSI on a weekly chart. Now, does that mean that we're about to see the end of this downturn? Not necessarily. We can stay overbought for a while. I mean, even on the weekly chart, there's no telling, how deep this sell-off could go. Look back here during the COVID plunge. It was a sudden drop below the 30 level of RSI, which is considered the oversold territory. That was back in the COVID plunge. Now, the reason why I want to point that out is to let you know that normally when we hit these oversold levels and a steady downturn like this, this could be the beginning of a continuation, of a slow continuation burn to the downside. Now, reason why I say, I'm saying we could stay at oversold levels for a couple months or maybe even a year. Anything is possible. But look at how long we stayed overbought. I'm gonna put a different box on this. Look how long we stayed overbought on this weekly chart. After we got a bounce back from the COVID lows. So overbought and oversold can work the same way. So here's overbought territory back in November of 2020. We stayed overbought. I'm trying to highlight that real quick. RSI. So the RSI stayed overbought when we first dipped into the overbought territory from around November the 15th or 16th of 2020, all the way up until we actually got up to about March of 2021. So several months, we stayed up in that overbought territory. The market continued to go up, grind higher. Then we start to level out. So could the same thing be about to happen on the downside? Could we stay overbought for the next, oversold for the next several months? That is a huge possibility. So you can't rule anything out at this point. But to determine if we even get to that point, we got to watch this key level on the Russell, because the Russell, again, is a precursor to the rest of the indexes. Where the Russell goes, so should everything else go. And I pointed that out earlier last year, or early last year, late last year and the beginning of this year. I said when the Russell started to pretty much trade sideways, when the Russell reached this peak, started to pretty much trade sideways for quite a bit, for quite a while. Try to highlight this area. Nope, it's not what I wanted to do. So when a Russell reached this peak around about February of 2021, it pretty much stayed in the range for quite a bit. That's the range. So the Russell made it up to that peak. It had one little thrust out of that peak around about November of 2021. But for the entire year of 2021, Russell hit that peak around about February 2021. It pretty much stayed within this range, folks, for an extremely long time. So it stayed around this range, close to being, at its all-time high for an almost entire year. Could we see that on the downside? Could we stay close to oversold for the next year? Yes, we could. That is a huge possibility. But what happened here is once Russell finished trading sideways and it's finally started to go the opposite direction and hit a high in around November the 8th, 2021. And then we started to trickle down. So the rest of the market, believe it or not, if I was to show you the rest of the market, general market was pretty much still in trying to crank out new highs after new high. All right. So now Russell is back to a certain level. And then where's that level? That level is where we seen price action stall before it went down, right before the COVID plunge. Here we go. So around November of 2019, market made it. Russell futures always pay attention to the futures, because the futures will dictate what's could be in store for the regular averages. So around November 2019, Russell made it up to this area, started trading sideways. Then all of a sudden, got to around about February of 2020, and then that was the COVID plunge, and we came right back down. And this level, folks, is right around 1700. 1700 on the Russell. And we almost made a round trip back to that level. So on this side, on the left side of the screen, former resistance now becomes support, because that was a resistance level that the market could not break through around that COVID plunge level area. And we couldn't really get a good break through that 1700. And then around February 2020, we fell well below that 1700. Then the market steadily, you all know what happened after that. The market steadily marched back, and everybody thought, oh, this is a great market, and nothing else is going to happen. Got back to that 1700 level right around here. September 2021, grinded around a level for a couple months, and then we finally broke through it. So now, once you break through it, it's no longer resistance. Now it becomes support. So this level now becomes support. So if we approach that level on the way down, that becomes a strong level of support. It's supposed to be a strong level of support. All right. So I like to point it out, because even though, we see a lot of selling overnight, we are back to that 1700, almost back to that $1,700 level now. We hit it last week, and we right around that level again. So this could be a strong area of support temporarily. Keep that in mind. Could be a strong area of support temporarily. If for some reason over the next week or two, or over the next couple of days, we break below 1,700 folks in a meaningful way, watch out below, because then the next level that we have to consider is right back round trip to the COVID lows. Round trip. That's something that we'll have to consider at that point. So if for some reason the market does not find a way to find its footing and get a bounce today, pay attention to the Russell, because the Russell break that 1,700 level, all bets are off for the market. All right, all bets are off. So pay attention to that 1,700 level on the Russell. If the Russell cannot hold this 1,700 level, we're going to see a big washout. Now it's hovering around 1,750 right now. Now, if I was to switch to a 4-hour chart, you'll see that we are 4-hour chart. We are a little bit overbought. I mean, oversold. I'm sorry. And we got a taste of that $1,700 level, and we got a bounce there before. That was back around 9 o'clock a couple of days ago. What day was that? Let's see. So that was around about 9 a.m. on 11th, May 11th. We hit that just below that $1,700 level. We got the first bounce. So I like to point it out because got a nice first bounce off of there, and then we pretty much went up to a level of resistance in the short term, and now we're almost making a round trip back to that level over the past week. Russell and Russell 2000 E-minis in the pre-market right now is trying to find its footing. So it's trying to find some support, get a bounce here now. The full stochastic is in oversold territory already. Wins percentage in oversold territory. RSI didn't dip. RSI did not dip below that 30 line on this 4-hour chart. So we could slam right back to this 1,700 level, folks. So that's something we got to pay attention to today and the rest of this week. So today and tomorrow, the 1,700 level is going to be a key level of support to pay attention to within the Russell 2000 E-minis. Now let's take a look at the VIX. The VIX is also another telltale sign. Okay, here is a 4-hour chart on the VIX, and I'm going to switch this to a daily because I've been warning folks about this level on the VIX. So here's a 1-year daily chart of the VIX, and here is the key level. I highlighted that too. Matter of fact, let's switch to a weekly chart because I want to show you guys some more. Detail as to why this is a very, very important key level. On the left side of my screen, you'll see that key level came into the picture even back in 2020 as the after the COVID plunge. VIX shot up to about 85, and then we sold off quickly back down below that $40 level. That's what I'm highlighting this level. I'm calling this a $40 level. Back down below that $40 level, so around between 39 and 40 bucks. So we got back down below the level around about April of 2020, and then since then, our support level has been way down here around about 15 to 16 bucks. Our resistance level has been way up here between 39 and 40. So we tagged that 39 or 40 level multiple times on last year. As you can see, multiple times on last year, we tagged that 40, close to that $39, $40 level. And I highlight those areas. Then, we stay close to the support level for most of 2021. And all of a sudden, we get towards the end of 2021, and we start to see price action start to try and challenge that level of resistance. We challenged it around about here, around November of last year. We challenged it here. It's the beginning of 2022. Challenged it here. It's around March around March of 2022. Now look where we're at now, folks. And I'm gonna point some other things out on this VIX. to let me believe that we're probably about to break through this level. So now I'm gonna make this a little bit bigger. Now look at this, getting very, very close to another test. We challenged it here. That was in May, early part of May this year. And what May the 2nd, beginning of May, challenged it here. Look at this next screen calendar that's starting to form. Point out a couple things about candlesticks. This is the candlestick that's forming now. This is the week that we're in now. We got a long body. We got almost like a shooting star, a long wick on the bottom. I mean, this is a big battle this week between the bears and the bulls with this VIX. We got a long wick on the bottom. We got bulls. Then this body trying to push this price action higher. Now look at the TTM squeeze. TTM squeeze is like it's just trying to come out of a squeeze. If I was at Bollinger Bands today, you'd probably see a very, very tight Bollinger Band range, like we're about to break higher in a meaningful way. Look at the full stochastics. It is pointing straight up on its weekly chart, pointing straight up. Look at the Williams percentage. It's pointing straight up and almost in overbought territory. Look at the RSI. RSI has been steady midway between 30 and 70, and it looks like it's starting to turn up with look, see this little cup action. It's about to turn up and just shoot higher. So it's pointing more and more like we're going to see a big washout in the market. So it's pointing more and more like, because if we break this $40 level, if we break over 40 on this VIX, all bets are off. All bets are off. So I give you two things to look at. Pay attention to the rest of this week and next week. Pay attention to the level on the VIX. We break above 40, then you know that the market's in deep trouble. The RSI, I'm sorry, if the Russell 2000 E-minis or the Russell 2000 futures, if it breaks below 1700, all bets are off. We're going to see some big issues. So I wanted to stop for take a second early this morning to show you guys those two things to pay attention to. And one more thing, if you guys are not part of me, do not follow me on Twitter, please do so, because I share a lot of information throughout the day on Twitter as well, like last minute information or something just popping up all of a sudden, and it's giving us some more signals. I like to share those signals throughout the day. So if I was to go to my Twitter feed, another thing to pay close attention to is the overall breadth of the market, and another easy way to do so is by looking at the Wall Street Journal tool that tracks the new highs and new lows throughout the day. And I've been sharing with folks for a while that this new highs and new lows, new 52-week highs, new 52-week lows, pretty much, I just want to show you the overall breadth of the market, how the market is leaning. So if you come to my Twitter page at God's Child Tim, I have this a quick link to this, because if you Google wallstreetjournal.com, or if you try to log on to wallstreetjournal.com, I had folks tell me it was hard to find this particular tool that's within the wallstreetjournal.com. So if you come to my page, beginning of my Twitter page, I got an easy access quick link. Click on that link, and it'll take you straight to new highs and new lows that are created throughout the day. Because as you can see here to the right of the screen, this last reading was at 4 p.m. on May the 18th, which was yesterday. You can watch this and revert to this tool throughout the day, and it shows you how the day is unfolded. So at 9 o'clock, it might have a different reading than 11 o'clock. 11 o'clock, it'll probably have a different reading than 2 p.m. And then, of course, at the end of the day, 4 p.m. is going to have the last reading for the day. So with that said, if you look to the left of the screen, you see a tab that says NYSE. So that tells you what the new highs and new lows are for the New York Stock Exchange. And then right next to that has NASDAQ. So if you click on NASDAQ, it'll switch. Then it'll tell you how many new highs, new 52-week highs were created for the NASDAQ. And then if you scroll down, I just switch back to the New York Stock Exchange. If you scroll down halfway, or whenever the new highs end, it'll show you the new lows for the day. Here we go. Now, just by looking at this one already, yesterday, there were 24 new 52-week highs created in the New York Stock Exchange and 346 new lows. that pretty much shows you the overall market sentiment. If you got more new highs, got more new lows being created than highs, and especially in a big way like that, that's showing that the overall breadth of the market is still negative. Okay, beneath the circles, it's still negative. So no matter what happens, we get those big rally days, come back and look at this tool, because those big rally days, a lot of folks will get duped in believing that, okay, this is reversal. We're ready to, to continue back up to the upside. Look at the breadth of the market by looking at this tool, and that's going to let you know if we're starting to create more new highs than new lows, then yeah, then it's believable. But if we still create more new lows than new highs, then any rallies cannot be believed. It could be just a bear market rally or bear trap. Now, look at the NASDAQ, switch over. 17 new highs were created yesterday versus 362 new lows. So again, that shows you overall the overall sentiment of the market, no matter if it's a rally day or it's a down day, come to this and you can pretty much take a quick snapshot of how the overall market is feeling. All right, folks, that's all I wanted to share with you guys today. Early this morning, now 6:18. So just be mindful of what I just pointed out this morning, and you can revert back to this video on my YouTube channel if you need to revisit it again and see how I pretty much broke down this analysis through technical analysis of this market. I am a technical trader, so I do pay a lot of attention to technical tools, technical charting, technical analysis. That's how I navigate myself throughout this market. All right, folks, till the next video, Tim Davis here, and I'm signing off. Enjoy the rest of your day, and who knows, I may be back towards the end of the day with another video. I'm saying if there's a sudden change in the market, a certain shift. All right, folks, take care.